All right, today we're doing something a little different. We're conducting a corporate autopsy on a patient that is, well, very much alive. We're cracking open Philip Morris International, a 175-year-old giant that's spending billions to systematically kill its golden goose, the cigarette.
So what exactly are we looking at here? Is this a brilliant next-level pivot into a quote-unquote smoke-free future? Or are we just watching the most expensive act of corporate self-sabotage in history? Let's dig into their latest annual report and find out.
First things first, we follow the money. The company is betting the entire farm on these new smoke-free products. But is the new hustle actually real, or is it all just, smoke and mirrors?
Okay, what you're seeing here is basically a company at war with itself. Back in 2024, traditional cigarettes, combustibles, were the undisputed king, over 61% of the business. Now, fast forward to 2025. See that light blue slice? That's the smoke-free category, and it is staging a full-on coup. This isn't just a minor shift, folks. This is them rewriting their own corporate DNA.
And this is the number that matters, 41.5%. We're talking about nearly half of their revenue now coming from products that don't involve fire. This is not a side project anymore. It's quickly becoming the main event.
So how in the world did they pull this off? Well, a huge piece of this puzzle came from one massive move, buying Swedish Match. That deal handed them the ZYN nicotine pouch brand. Now that's what you call buying growth. And just look at this chart. That purchase sparked an explosion of what they call organic hustle. Shipments in the Americas just skyrocketed in 1 year. ZYN in the US isn't just growing, it's an absolute gold rush.
But, and this is a big but, here's the twist. While the new hustle is absolutely booming, the old one is still the one paying all the bills. Get this, the company raked in an extra $1.5 billion last year just by jacking up prices on their old-school cigarettes. That was more than enough to completely cover the money they lost from selling fewer of them. So the old cash cow is literally funding its own replacement.
So we've established the revenue growth is there. But is it real money? Is it actual cash? Let's follow the trail and see if it's really hitting their bank account or if it's just paper wealth.
On the left, you've got net profit. That's what the accountants say is left in the pocket after the taxman and the lawyers are done. A very nice $11.3 billion. But on the right, you have operating cash flow, and that's the actual green paper hitting the desk. And look at that, it's even bigger, $12.2 billion. This tells you the profit is very real, and it's converting to hard cash incredibly efficiently.
Now, if you were just flipping through their balance sheet, you might see a number that makes you spit out your coffee. Negative shareholder equity. But listen, this is not a sign they're going bankrupt. In fact, it's a feature, not a bug. For a mature cash cow like this one, it just means they've given so much cash back to their shareholders over the years that on paper, the books look totally upside down. It's actually a sign of a hyper-efficient capital return machine.
Okay, so they are sitting on an absolute mountain of cash. The next logical question is, how are they spending it? Is management playing some brilliant game of 4D chess here, or are they just burning the furniture to keep the house warm? Since 2008, they've pumped over $16 billion into R&D just for smoke-free products. To put that into perspective, that's enough money to launch your own private space program, all just to make sure you don't need a lighter anymore. This was a long-term all-in bet. And in the last year alone, they spent another $1.6 billion on capital expenditures. This is where all that R&D becomes real. This is them building the technology and logistics engine, like a massive new ZYN factory they're putting up in Kentucky, just to keep up with that insane demand we saw earlier. And yet, here's the wild part, while they're funding this massive internal transformation, they also paid out a staggering $8.6 billion to shareholders in dividends. I mean, this is the ultimate high-wire act, building the company of the future while rewarding the investors of the present on a massive, massive scale. Okay, time for the final piece of this puzzle, the risks. Because with any reinvention this huge, you know there are existential threats lurking around every corner. So the question is, how deep is their bunker? This quote from their own report pretty much says it all. Their number one threat isn't the competition, it's regulation. We're talking about a global army of governments and health organizations that are actively trying to shrink their market, whether it's for the old products or the new ones. But that financial bunker we mentioned, it is incredibly strong. This number, 15.4 times, is their interest coverage ratio.
In plain English, that means for every single dollar they owe in interest on their debt, they're earning over $15 in profit. They can more than handle their debts while the regulators are knocking at the gates.
Of course, there are other headaches. They have a mountain of debt sitting at nearly $49 billion. 6% of their assets are tangled up in the geopolitical mess that is Russia. Being a global company, currency swings can really hurt them, and they are in a constant war against counterfeit and illegal products.
So after digging through the growth, the cash, the big bets, and all the risks, what's the final verdict on this whole corporate autopsy?
Here's the bottom line. This isn't self-sabotage. It's a deliberate, unbelievably high-stakes evolution. They're trying to transform themselves from a slow-burning, combustible dinosaur into a fast-moving, nicotine-tech mammal. The financials show the surgery has, so far, been a success. The patient is stable, and it's off the operating table. But the recovery is far from over, because the regulatory jungle they now have to survive in is absolutely full of predators.
For more in-depth research reports, you can always contact us at HDIN Research. Thanks for tuning in.